What's up? What's up? What's up? Welcome to Millionaire Mondays. I'm your host today, Mr. Joel Harrison. All right, so we're gonna have some fun today. I know last week the market sold off really hard, and it shook a lot of people. And I tell people all the time, when you make money in the market, you want to kind of buy when everybody's crying. So, I do these different free videos so that we can get educated on the market. We all know about the fundamental side. We need to pick up the technical side so that we can give ourselves an edge, in making money in the market. And I know there's so many educators out there that's trying to charge off 10, 15, $20,000 to learn the technical stuff. So I like to give it to you for free because I make money, investing in the market, right? That's why my family, attained that millionaire status. So I make money in the market investing so I can afford to give this to you guys for free. I do have education that's available for those that want specific education. But what I like to do during these segments is I want you to give me a stock. That stock has to be bigger than $1 billion in market cap because I can't show you guys penny stocks. And I'll analyze them using my tools. Now, when you give me that stock, because we're talking to traders and investors and intraday traders, I want you to give me like specifics. Like, do you want me to look at it for a long-term investment, or are you looking for a intraday trade, or are you looking for, a 7, 8, 10-day trade? Because once you start investing and trading in the market, you're going to realize that it's not one way. And you got to be able to answer those questions in your head, before you hit that buy button. And my job is to try to teach it to you guys. So in the comments section, if you want to go ahead and give me one stock, don't give me 10 or 15. Don't put your whole portfolio. Just give me like one stock. And if I look at that stock, or if you see that somebody else has given the same stock, maybe I'll look at another stock and I'll try to get to everybody's stocks before 8 o'clock. All right. So we're still waiting for a couple of more people to join. Some of you are new to me. So what I'm going to do is I'm new to this technology using StreamYard. So you can make comments and I can bring your comments onto the screen so that everybody can see. So if you're interested in a stock, I can bring that stock. Or if you have a question for me during this particular segment, I'll try to answer as many questions as I can regarding the market. But I'm getting used to this. So bear with me. Give me about 30 to 60 more days and I'll be able to go back and forth flawlessly. But I'm trying to figure this stuff out. So before we even start, let me go ahead and add this. I am a full-time day trader. I'm an expert in stocks, options, futures, and cryptocurrency. I have over 10 years and I have over 25,000 hours of trading experience. And anything that we talk about today are the opinions. The opinions. I want you to do your due diligence. They are the opinions of What Would Joe Do, which is my business. All right. So I'm just an average trader, just like you. And but I've been in the market for over a decade and I have receipts, right? I've built accounts from zero, right, to a lot of money, right? I've traded the options, the stocks, the futures, the crypto market. If you're part of any of my rooms, you're going to see receipts fly from my account. So I'm what you call a unicorn. You're probably not going to find too many traders that are going to be trading the market just like you. That's going to be showing you what he's trading, and I'm not going to be afraid to say, "Hey, buy this," or enter this particular trade. And I'm not afraid to show you guys receipts. Most teachers are going to give you one without the other. In my opinion, those are the teachers that you should shy away from, because if you're going to teach people the market, if you're going to really teach them how to make money in the market, you should have some type of transparency where they can at least see if your strategies, have results. And that's why a lot of you guys are losing money in this market, because you're on YouTube, you're trying to piece together 15, 20 different strategies. You hate the people that are on TV, the millionaires and the billionaires that are telling you what to buy. And my job is to kind of tell you guys, what to look for in the market. So that's why we have this segment, so that when you guys give me a stock, I'm going to show y'all how I actually analyze it. Like what is a millionaire thinking when he's looking at this particular stock? And then what type of time frame am I thinking, when I decide that I want to buy it, whether it's stocks, whether it's in the options market. We're not going to really, I'll look at some futures contracts, but most of you guys are really not educated in that part of the market. And then as far as cryptocurrency, I'll look at Bitcoin, because I can pull up the futures contracts. I can also pull up the crypto on Yahoo Finance as well. So even if you're interested in maybe some of the top 30 cryptocurrencies, I can also take a look at that as well. So let me see if the comments are working. Just make sure that you guys can hear me. If you can't hear me, please let me know immediately, and I'll try to rectify the situation. All right. So investing and trading is easy, guys. Investing and trading is easy. You make it hard. You make it hard. This is the easiest thing ever created, and you guys overthink it. You guys spend too much time with too many indicators trying to, stocks either are going to go up or down. You got a 50% chance of winning. The problem is that a lot of the times you guys don't know the time frame. You don't know what the stock can do because you haven't learned the technical side. Now, it's not your fault. The technical side wasn't even really available to us, for like the last, 15, 20 years, right? So anybody that's doing this right now, we're pioneers. And I know you guys love to go on Instagram and watch CNBC, but what I hate about Instagram, or what I hate about CNBC, is they can talk about a stock, but they don't really show you like what's really going on. Like, they can talk about it, but they don't really pull up the charts. They'll pull up the charts, but some of you guys don't really understand what to look for. So my job is to be able to interactively be able to explain, what's actually going on with it, so we can really figure out how to analyze these stocks. But investing and trading is easy. First of all, you got to know if you're investing or if you're trading, and quit making it hard. We're going to keep it real simple. Now, what is the Millionaire Challenge? Well, the Millionaire Challenge is literally speaking out to the world that I want to make millions in this market, because if you can't believe that you can do it, then you can't achieve it. And I know that's typical for people to say, if you dream it, you can achieve it, right? But seriously, a lot of you guys really believe that you can't become millionaires. And so many millionaires have been created in the last 10 years just in cryptocurrency alone. Cryptocurrency was the best asset class to invest in the last 10 years. And a lot of you guys shied away from it because you didn't really understand it. You didn't know anybody that was actually investing in it. And this segment is not about cryptocurrency, it's about the whole market, right? You should be able to make money in all of these different markets. But you guys got to say to yourself, I want to be a millionaire. Making money is easy. And yes, you're supposed to make slow money and you're supposed to make fast money. If you've taken any of my webinars, if you've ever been to Webinar Week, I explain how to approach the market. All right. All of us can be athletes, but we don't know if we're a football player or a baseball player or a basketball player. You're athletic, but you got to figure out what's your sport. And that's my job. Some people can't intraday trade. You got a 9 to 5 job. You're a surgeon, right? But everybody should be able to invest in the market and trade in the market. But a lot of you guys, I'm gonna stay in business forever because most of you guys don't have the skill set to figure out how to make a dollar make money, right? And that's kind of my job. We're going to be using the what would Joel do method, the entries and exits. This is a flag pattern. You can write it down. I use flag pattern momentum indicators to kind of teach me. I usually go with the momentum. If everything is going right, I'm going to go right with it. If everything's going left, I'm going to go left with it. The market was down big on Friday. I was investing in it, but as a trader, you want to go with the momentum. I'm going to teach you guys how to do that, especially for you people that just hate the bandwagon. Well, if you hate the bandwagon, then you can't be a trader because traders are all about bandwagoning. We're not about counter trending. I never really met a counter trending trader that's going against, what the market is doing. I see you guys struggle so much instead of just going with the flow. Today's focus, if you've been watching all of my videos, there'll be a focus. Today, we're going to focus a lot more on the 50-day moving average, which is that red line you see, and the 200-day moving average. The 50-day average is for your traders. All right. This is the S&P 500. The S&P 500 drops to the 50-day. You want to trade maybe 50 days or more. You would have been up in the market if you were just using the simple little red line. And for you investors, we really didn't get too close to this 200-day moving average yet. So we're still licking our chops waiting for that to happen because the 200-day moving average is the most used indicator on the planet, and it's what millionaires and billionaires and pension fund managers and mutual fund managers and hedge fund managers use to buy stocks on sale. If you didn't know that, then welcome to the Millionaire Challenge. All right. You can always go, if you want your charts to look like mine, you can always go to my PayHip, www.payhip.com/what would Joel do. You can make your charts look just like mine. You download the video. It's an hour video. You set up your charts on Thinkorswim. You set up your charts with Thinkorswim through TD Ameritrade, and I'll walk you through how to make your charts. Everything that we talk about today, you're going to have access to. If you don't have my app, go ahead and download it now. It's available on iOS and Android devices. It's free. You might as well download it. There is an alert service if you choose to do it. Inbox me if you want to know anything else about how that alert service works. Webinar week is coming up December the 14th through the 16th. All right. So now look, guys, I'm telling y'all guys right now, prices are going up next year. Why? Because the Feds just decided to print $5 trillion. Inflation is coming. So the prices of everything that I'm doing is going up. You better get in now before the prices go up in January. This is going to be the last time you see it at $65 for 3 days. So any friends, family, anybody that's trying to take this right before Christmas, you're going to be on break anyway. You might as well take this particular class. It's a 3-day class. You're going to learn something. I'm not going to upsell you at the end for a $15,000 or $20,000 class. You gonna learn something that day, and anybody that's ever taken that class will attest for it. All right. There's a couple of places you can find me. On Facebook, you can find me in 3 places. If you need one-on-one consultations, I'm now going to be doing consultations on the weekend. Why? Because I'm going to focus more back to what I used to be doing, which is trading. I'm going to be doing that during the week. I'm going to be doing consultations from 10 to about 1 o'clock on the weekends. If you're not part of the Insider Trading Room, go there. We have over 20,000 members. Everybody's rubbing elbows, talking about the market all day long. Ninja Trading is for anybody that's ever taken any of my classes, anything that you've ever taken from me. If you bought anything from me, the love that I give back is that you have free entry into this particular room. Don't join the room if you never bought anything from me. You're not going to get in. You can go to YouTube, find videos there. And you can also find me at the Insider Trading. This is on Instagram. So if you're on Instagram and you want to see live, like I'm always on Instagram putting videos of me dancing, certain topics of what's going on in the market. If you're on Instagram, please find the Millionaire Challenge uh, page or handle and follow me, please. All right, last thing before we get to these charts. Again, if you need education right now and you don't want to wait till webinar week, you can always take my individual courses. All right. If you don't understand options, you can take it. If you don't understand day trading, you can take it. If you don't understand futures, if you need your chart set up, if you need to know support, resistance, trend line, Fibonacci's, you need to go here. And if you're just a beginner and you're like, Joel, I don't know any of this crap, then you need to take the How to Buy Stock Party Live video. All right. So now that that's done, let's get to the charts. Welcome to the Millionaire Challenge. And let's talk about the S&P 500. But before we look at the S&P 500, let's look and see how the market did today. Now, this is the Thinkorswim chart. This is the Thinkorswim platform. The best platform out there, hands down. I know it looks like it's $1 million. Guys, it's free if you open up an account with TD Ameritrade. You're going to have access to this for free. I don't care if you have a Robinhood account or M1 Finance or a Fidelity account. You can use this to analyze stocks, get alerts, and then you can buy stuff on your other platforms. But you got to be able to analyze these stocks. You're learning from a millionaire. All right. So this is how the market looked today. The market was up big. Now, this is what's interesting. If you notice, the only companies that were up today were the big companies. Now, early this morning, 9:30, you should have known this immediately. So if you traded anything outside, if you traded anything that was less than $100 billion in market cap, you probably lost today because you don't know what to look for. Investing and trading is easy. What do? I follow the money. If the money is flowing into big companies, guess what Joel's trading today? The big money. So many of y'all think that you smarter than people like me. You ain't smarter than me. And this is who you're trading against. If you want to trade like me, you better think like me because I'm out here to take your money, right? So if I wake up and I see billionaires that got more money than me buying Microsoft and Nvidia and Tesla, guess what Joel's going to buy today? Now, this is for your traders I'm talking to, not your investors, your traders, the people that want to get in and out of the market today, the people that knew that the market was down heavy on Friday and knew that there was probably going to be a bounce and said, all right, what stocks are going to really, really bounce where I know I can probably make some money? That's who I'm talking to today. Okay. Not your investor. If you're an investor, you should have bought your stocks on Friday. Why are you buying them today when the market is up? All right. If you're an investor, you see things on sale 3, 4, 5, 10%. You better go in there and buy it. All right. An investor is somebody that buys something and holds it for longer than 12 months. So this is a heat map. This is a heat map of. Well, let's look at the heat map for the Nasdaq. The Nasdaq is just your technical companies, your eBays, your Nvidias, your AMDs. All right, your semiconductor companies. And look at this. They basically told you what to trade. And y'all be killing me waking up because you done read it all night long. You done studied some other stock all night long, and then you get up and then decide you're gonna trade that stock. And then you wonder why you lose. I'm like, you losing because you decided to trade that stock, and billionaires decided when they woke up that morning they weren't buying it. That's why you lost. You got to follow the money. This is how you do it. All right. First thing I do is I wake up, I look at the S&P 500, I look at the heat map, they tell me what to buy. Great. Now that I found out what to buy, I got to figure out how much these things can actually move. So this is the S&P 500. It's the 500 biggest companies in America. Why is this the one that traders look at? Because it's the one that has the most. Well, I mean, you can argue and say that the Russell 2000 has the most companies, but the Russell 2000 are your small cap companies, your smaller companies, not your bigger companies like your Apples and your Microsofts and your Googles and your Amazons. So when you pull up the S&P 500 collectively, what have they been doing for the past couple of months? Let me pull up a clean chart. Let me erase that. So the S&P 500 was just hitting the 50. You remember how I told you guys the 50-day moving average is used for your traders? Watch how easy you could have made money. Watch how easy. Y'all be having 57 indicators. Yo, if you come to me and you got more than 2 indicators on your chart, my brain immediately says they can't make money. Like how can you make money? You got too many decisions to make. A stock gonna go up or down, up or down. Why you need 37 indicators to tell you that? So watch this. You could have used one indicator and a black screen. You could have said, you know what? Joel said trading is easy. This is the S&P 500. So this is what every trader is looking at. So if you're struggling in the market, the first place you go to is the easiest trades first. You don't go to the hard stuff. You start off with the easy stuff if you're trying to get to $1 million. The easiest thing on the planet to trade is the S&P 500 and Apple and Microsoft. Those three. If you're struggling, write down those three, become an expert in those three. Then you can start trading the Nvidias and the Teslas and the Fords and the what have yous. All right. But that's where you start because you could have easily made money every time this thing hit the 50-day moving average. Y'all see this? I want you to see it with your own eyes because y'all got cousin Larry in your ear trying to teach you how to trade with 57 indicators. And old Jolie Joel pull up one chart that everybody knows about, trading the one thing that everybody knows to trade using one indicator. And literally, I'm just going to buy it when it hit this red line. And then look at how much money I made. Then I'm going to buy it when it hit this red line. And then it went up and I made money. Then it hit this red line again. And then I made money. Then it hit this red line again. And then I made money. Then it hit this red line again. And then I made money. And then I hit this red line again. And then I made money. And here y'all are thinking that trading is hard. Trading ain't hard. It's the easiest thing ever created. Y'all make it hard because you listening to the wrong people. And I vent and I say that a lot because I look, guys, you take 100 people teaching y'all how to trade, 5 of them are going to be decent. The other 95 are scam artists. They're making money from education. Period. They don't know how to trade, right? That's why I'm always angry and I'm always mad and I'm always like, guys, why are y'all making this so hard? This stuff is easy if you know what to look for. Look at how many times you would have been right. This is just in 2021. We ain't even talking about going all the way back to 2016, right? And it's just because you guys, again, I'm not going to vent, but you should have bought it here. You should have bought it here. Look at all of these different times you could have bought the S&P 500. If you had bought options on it, even if you had bought stock on it, it was up. It was up. Look at this. 1, 2, 3. How many times it's going to win in a row? 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. That was a struggle, but what? It struggled from what? September the 13th to it struggled for 30 days. Woo, woo, woo. It ran 10 times in a row where you literally was making money the next day after it hit the 50. You literally was making money the next day. And then it struggled for 30 days. Joe, your strategy sucks. This ain't my strategy. This is what they talk about on TV every day. Every single solitary day, they'll pull up a stock. Y'all hear them talk about it. You don't know what they're talking about. They'll say, all right, we got close to the 200-day or the 50-day. They might say the 100-day. And you have no idea what they're talking about because they're talking in millionaire code. They're like, why are these people making this so hard? We're not that smart. We literally are saying, when you get down to this red line, we just going to buy it. When you get down to this red line, we just going to buy it. And then long term, for your investors, when you get down to this blue line, we going to buy it. All right. And y'all make it hard. Now, why did I use all the voices? Why did I sound like this? Because I wanted you to actually learn this so that you can use this for the rest of your life. That's why I do the voices. All right. Now on, anytime you pull up a stock, 50-day, 200-day, trader, 50-day, investor, 200-day, trader, 50-day, investor, 200-day. Are you going to lose? Yeah, it's going to lose. But when you have momentum stocks that are going up in value, it might run 9, 10 times, lose once or twice. Run some 8, 9 times, lose. Why? Because look at what the market has been doing for the last 10 years. Let's look at this month chart. This is what the market's been doing. It's been going straight up without you. Y'all know when this was? This is 2008, 9. The stock market is just a casino. Word? Word? This is what the market's been doing without you because you're listening to the wrong people. All right. Then, well, this might be it, Joel. It might go down for the rest of, okay. But again, this is from 2002. This is 19 years of the market moving up. But this is it, Joel. I watched the Big Short. This is it. Okay. Keep listening to doomsday people. All right. So now you know what to do. So when I pull up your stocks and I pull up the 50-day and the 200-day, you're going to know what to look for. Oh, Joel said when it hits the 200-day, that's what investors use. What's investing? Buying something, holding it for 12 months or longer. Why? This also applies to options. Okay. 50-day, same thing. Now, let's go back to the beginning. Remember back to the beginning. Why are you here today? We ain't here today to make no slow money. If you want slow money, go talk to somebody else. You're here today because you realize that the quickest way way to $1 million is not saving $50,000 a year for 20 years. Oh, no, 50,000 a year. Yeah, for 20 years. It's not. The fastest way of making money in this market is this. I want those numbers ingrained in your head. I literally be singing a song when I'm driving my kids to school. I'd be like 1,000, 2,000, 4,000, 8, 16, 32, 64, 128, 256, 512, 1 million, 1,000, 2,000, 4, 8, 16, 32, 64, 128, 256, 512, 1 million. Why? I'm training my brain. I'm training my brain into buying things and doubling it in value, right? All right. I go and I buy something for $2,500. I'm going to hold it till it gets to 5,000. I'm going to take that 5,000. I'm going to do it until it goes to 10,000. Now, am I telling you to go do that with your portfolio right now? Nah. This is not for your long-term boring money. This is for those individuals that really believe that the fastest way to getting to $1 million is flipping $1,000 10 times or flipping $2,500 maybe 7 or 8 times. All right. Shoot, even if you did it 5 or 6 times, you're gonna get to 100. But if you don't believe it, you ain't gonna be able to get it. And if you don't see it happening or know what to trade, then you also don't know how to get it. And I get it. Well, Joel, most of these classes, it costs $30,000 for them to show me. Well, I've had people show me those classes, and believe it or not, those classes still didn't show it to you because the one thing they should have said was the fastest way to getting to $1 million is flipping your money day one. All right. In those particular classes that's teaching you how to make a whole bunch of money. But instead, what do? They try to teach you 57 indicators. Learn how to look at a chart clean, realize that a stock is going to go up or down, simplify everything. And that's the fastest way to getting to $1 million, by seeing a clear picture. I need things that are going up in value, right? That I know have momentum, and I need to trade the assets that's going to get me to that number, right? If you put $100 in Apple, it ain't getting to $1 million in 20 years. Sorry, it ain't. But you can take $100 and flip it. You can put it in Apple, and maybe if Apple doubles in value and you take that 200 and put it into something that's fast growing, you can get there a lot faster. But how do you know what to look for if you don't know what to look for? That's why you got to get educated on the classes. So Let's look and see how the spiders did. So the spiders was going up in value. Okay. I'm gonna spend a little bit of time on the spiders so that when we get to your stocks and I go through it really quickly, you don't get lost. All right. So when we look at the spiders, you see that the spiders was going up in value. That's long term. Well, what is the spiders doing, as an investor, right? If I was an investor and I was thinking about buying the spiders, is this a good time to really be buying the index? Even as an investor, I'm not going to buy the index until it gets to the 50-day or the 200-day. That's just me because I know that the spiders has a 1.0 beta. And a lot of you guys don't know what that means. That 1.0 beta tells me that the spiders drops 10% a year. So Joel's not even going to buy as an investor unless I get close to that 5 or 10% from its highs. So even from where we are right now, just off of that yesterday move, I'm going to notice here that the spiders dropped about 3%. Now the spiders drops 5 to 10% every year. It's actually dropped 5% 6 or 7 times within the past 18 months. But we haven't dropped more than I think 8% in over 18 months. So usually when the spiders drops about 5 to 7%, your investors and your traders come in and they buy the market. Now, I don't know why you didn't know that. These are like simple statistics that are just ingrained in my head. 10%, 15%. Apple drops 20% every year. Microsoft drops 20% every year. How come you didn't know that? Tesla drops 50% every year. Cryptocurrency drops 50% every year. How come you didn't know this? Right? Because you're too busy trying to read and thinking that you're going to buy this at the right levels. And you're doing the right thing, but you're using the wrong process because you're listening to the wrong people. All right. So the S&P dropped 3%. I actually think it's going to come down here to this 50-day. Why? Because the S&P 500, guys, drops. It's already dropped 5% 6 times. Six to 7 times. You don't believe me? Check this out. This is the S&P. All of these dips you see right here, these bigger dips, they were like, this dip was 6%. This little dip right here was 3%. This little dip right here was 4%. This little dip right here was 6%. Okay. What I'm doing right now, you could have easily done, and you would have said, well, hold up, Joel, every time it drops, it's like 5 or 6%. Yeah. And when it drops 5 to 6%, where is it dropping? To that little red line that you just now learning about today. And when it overshot it only overshot it a couple of points. Why? It was averaging like 4 or 5%. It went down to 7. It dropped an extra 2%. And then where are we right now? Well, we hit all-time highs about 3 or 4 days ago. And what I mean by all-time highs is that's right, guys, the highest the S&P 500 has ever been in the history of mankind. And now all we did was we pulled back a normal. It was a lot in one day, but we pulled back 3%. That ain't nothing. Maybe it gets down here to the 4% level. That's kind of where investors you're going to see come in and buy a lot. You're also going to see them come in if it gets down here to the 10%. Now the S&P used to average a 10% move every year. So it dropping to this blue line is I'm actually hoping that it does it. And, and when it gets down there, you can either buy it in stock. But I know a lot of people are like, well, Joel, if it gets to 426 and it goes to 480, which is a $60 gain, I'm really not going to make that much money. Because even if it got down to here and it went back to where we are right now, I'm only going to be up 10%. So even if I invested $1,000, I'll make $100. That's not really doubling my account. So you have a lot of people that are either going into the futures market or they're going into the options market to trade this. But let's talk about what happened today, right? Let's say the market sold off on Friday. Let's say you got less than $1,000. And let's say you woke up at 9:30 and you saw this. and you said, you know what, I want to take a shot at the S&P 500. Like, can I double my money in one day buying something like the S&P that only drops 5 or 10%? Yeah, you sure can. How do you do that? Well, you got to go into the options market. You got to see if there was any unusual options activity. And as you can see, a lot of people were buying the S&P 500 at the 465 strike. Cool, 465. Early this morning, they were buying the 465. So early this morning, when you woke up, you should have known that the S&P 500 moves about $5 every day from the lows to the highs, from the highs to the lows, from the lows to the highs. It's going to move like $5. It's called the average true range. So if you go down to 457 and you know that early this morning we were at 457, all you had to do was add 457 plus 5. 457, let me take out my calculator. 457 plus 5 is going to give me 462. Now, the spiders moves $5 every single day. Why would I have said, you know what? I know it moves $5, but I think today it might go a little bit higher? Because the billionaires told you. You could have got up at 9:35 this morning and looked at your charts, and the billionaires said, yeah, we know that the 462 area is the average true range, but we buying this strike right here, 465. You could have made some decent money. Okay. So let's just say you were let's say you just did the 464 strike, right? How much money could you have made today? Could you have doubled your money? I don't know. I didn't even look at this yet. Could you have doubled your money? Well, getting news late, right? Let's say you woke up at 9:30, 9:35, and everybody's talking about the market's going up. And you're like, dang, I missed it. The market's already up 1%. I missed out on it. Did you? Remember, the S&P moves $5. You ain't missed nothing. You could have literally looked to see what the billionaires are buying. They talk about this on TV every day. They call it unusual options activity. They talk about it all the time. I bet you your cousin Larry don't talk about unusual options. He probably trying to get you to buy penny stocks. And then you come in here and you say, you know what? I can't break the bank like everybody else. Joel, I can't get to $1 million. Yes, you can. Right? So this is Monday. Market sold off a little bit, started to go down. We teach that when things go down, they go down. And then when they finally start to go up, you could take a shot. Maybe it goes up in value. Maybe the minute the trend breaks, you decide to get in. How much money did you need? $50. Hold up, Joel. I'm writing this down. $50. Most of us have $54. You could have taken that $54, 54, not 500, trying to buy Tesla, and 5,000 trying to buy these Tesla options. You could have taken $54 around 11 o'clock, trading the S&P 500, which is the most traded index on pretty much on the planet. The most liquid. Y'all saw over 200,000. How many contracts? Like over, I forgot. It was a lot of contracts being bought. You could have taken $55. And do y'all know that $55 would have given you your first 100% return in 45 minutes? And you got the news late. You got it late, right? You do that a couple of times on days where you know that the market might have a push going up. You get to where you need to get to faster. Now, I just showed you the $55 to the 110 mark just to show you where it would have doubled. Let's say you bought 4 or 5 contracts. You sold 3 of them, right? So you used what, $500, and now it's worth 1,000. And then you said, you know what, I'm gonna sell 4 of my contracts, or I'm sorry, 9 of my contracts, and just hold one. That joint doubled again. It went from 55 to 110. Now you thinking you late. It's 12 o'clock. And then it doubles again from 110 to 220. And then it tops out right around 260. Yes, I'm saying this. You're seeing it with your own eyes. You know, I hate when people talk about stuff and they don't show you, because I can't do A plus B equals C. It always feels like the market is a gamble or it's a casino. And that's what most of you guys have been doing your whole life. You get one piece of information, but nobody shows it to you. You hear them talk about all the money that can be made on TV. They don't show you the entries. They talk about all the money people can make in the options market, but they don't show you the options. Well, I'm here today to show it to you that this is real. This is the S&P, people. We ain't talking about some secret society stock that don't nobody know about and you can only find in these Reddit forums. We're talking about the most used indicator on the planet, and all you had to do was pull up the options activity and see where the billionaires was buying, and then take a chance. Okay, maybe I could have lost my $50. But wouldn't you take a chance with $50 if you knew it was going to go to $200 on a day where you woke up and you saw this, or you saw this? Give yourself a chance. Now my $50 is worth $200. Let's say you take that $200 and you lose tomorrow, and you are only risking 50%. Let's say you won today and lost tomorrow. You made 200 today, but then lost half of it tomorrow. You still up 100%. Let's say you lose again. Let's say you won, lost. You back at square one. Now, most people are like, hold up, that don't even make no sense. How you lose twice and win one time and back at square one? Now you understand why I'm who I am, because I work with numbers, right? If you use numbers to your advantage, you're going to get to these values that you want to get to. The problem is a lot of you guys aren't using the numbers to your advantage. All right. So I'm trying to teach you guys how to think, when you're trading. You need to have your risk to reward. I teach all of this during webinar weeks. During all of my webinar weeks, we talk about risk to reward. All right. So now let's get to some of you guys' stocks. I know you guys have been waiting to look at these stocks. Let's look at your stocks. Let me pull up the comments. Let's go ahead and look at some of these stocks. All right, so Moderna was up big today. What is Moderna? Moderna is a very, it's not small. It's a I'm going to talk about market cap. Moderna is a $149 billion biotech company that produces the vaccine. Well, now that you have Omicron out, right? Moderna is going to pick up even more business, and a lot of their business is coming from the federal government. So Friday, Moderna was up huge. I think it was up 20 something percent, which is amazing. Even if you had 100, if you had 10,000 in it, you would have woke up the next day and you would have been up $2,000. The options was up ridiculously. A lot of people didn't think that they were going to make money today on those options. Let me show you guys what the options contracts look like today. Let's look and see how much these options were up, because some of y'all don't believe the amount of money that these options were up in one day. You could have made an obscene amount on Friday, and then you could have woke up on Monday and turned another double. That's right, guys. You could have got in late, got on the train late, and still made 100% return on Monday. There go your first double. You just need 9 more to get to $1 million. All right, depending on how much money you started out with. All right, making 100% return is not that hard. You just got to know what to look for. You got to know what to trade. And in the options market, you're going to see it every single day, trading the largest companies that are out there. All right. But let's say you wanted to trade this And let's say you woke up at 9:35. All right. Before we even look at it, let's look and see what Moderna has been doing. This is Moderna's chart on the month. So as you can see, it's been going up in value, right? So that's no secret. It's bullish. But let's see how it handles the 200-day. Are investors buying it when it hits the 50 days and the 200 days? When you start seeing a pattern like this, you write down this company and say, oh, everybody's just buying it when it hits the 50-day, 50-day, 50-day. It lost right here, depending on how far out you went. But check this out. They started buying it right here at the 200-day. Okay. So it won 4, 5. What? It got above the 50. I mean, guys, it's going to lose at some point. Once this line started to go up, if you were to just take 60-day options on this, you would have won one time. Let's count how many times you would have won on Moderna. Now, everybody knew about Moderna too. Now, we going back to 2019, so we didn't know about the pandemic in 2019, but we did know about it in 2020. So let's just go off of when we first figured out what Moderna was. Once we figured out what Moderna was, you would have won right here. Even when it hit the 50-day here, you would have won. I mean, after 8 days, it was up in value. You would have won here. So let's count how many times you would have won. Now, everybody knew about Moderna when the pandemic happened because you were sitting at home doing nothing. So all you had to do was study the dang stock. But I'm going to teach you how you study a stock because what y'all are doing drives me crazy because you make it too hard. The 200-day is here. The 50-day is for your traders. The 200-day is for your investors. The 50-day is for your traders. The 200-day is for your investors. You traders out there, you would have made money there. You would have made money here. That's 2 times you would have won. You would have won here. That's 3 times you would have won. You would have won here. It only gave you a day to buy it. That's 4. You would have won here. That's 5. Now this is 2020. Even if you bought it here and you had given yourself enough time, which is 30 to 60 days, you still would have won, even though it dipped on you from August to September the 17th. That's 30 days there. This is about day 40. That's why we like you to go 50 days out. If you're using the 50-day moving average, you should be going 50 days out. All right. So we're going to count that as a win. That's like what? Number 5? Let me count it, right? 1, 2, 3, 4, 5. Forgot that one. 6. It was up. Some people would have lost. 7, 8, 9, 10, 11. Ooh, this was a long one. You might have, if you had given yourself 50 days, you would have won. That's 12, 13. And now we're experiencing 14. We'll count that as a loss. This bad boy won 13 times in a row and then finally lost the 14th time. But then, even if you lost here, you could have re-upped at the 200-day because now it ran 13 times for the traders and the investors the whole time been waiting to buy it. They've been waiting a whole year. And you know who was one of those investors that was waiting to buy it? Me. For 12 months, I've been mad because I couldn't buy Moderna. So you know when it finally hit the 200-day, I came in the room and I said, everybody, I'm buying Moderna. You coming with me? Some people came. Some people were like, Joel, I ain't buying that. Well, then you missed out on all of this. All right. You missed. I remember when I bought it, everybody was like, these 3 or 4 days, this is the worst investment. I'm down $20. You know why? Because y'all bought 7-day, 10-day options. That's why you lost, because you was being cheap. That's not the strategy that we teach. That's not the strategy that millionaires are using. All right. You should have been looking at an hour chart. We'll get to that in a second. But it's gapping up. You would have made money 12, 13 times in a row, lost finally. But it won 13 times. Y'all know if you had just traded Moderna, starting with $1,000, it won 13 times in a row. There go your million right there. Then it lost. Let's say you were at 500 grand and then you lost and it went to 250 and you had to sell and then you got back in with 250. You probably back at 500 again, ready to make that one extra trade to get to a million if you're trying to flip. It really gets hard once you get into those six figures. I tell people that all the time. The first 10,000, it'll be easy. When you get to 100, you probably can keep trading it. But once you get to about 100, you start second guessing your trades. Plus, you need enough liquidity out there to be able to buy something when you're using six figures, especially in the options market. So you'll see a lot of people trading the Teslas, the Amazons, the Googles. All right, and remember, the S&P 500 is really the S&P 500 is pretty liquid, so you can also move a lot of money when you're trading that market. But it gets hard. But Moderna, did well. Okay. And you also could have made money today trading it. Let's say you woke up today, this morning, and you were late. You didn't even know what happened on Friday. You just woke up at 9:30 and you said, you know what? Using Joel's method, Joel teaches me that if I'm using the Ichimoku and I look up and it's 9:30, Joel says, it's 9:40, 9:45, and we're underneath this yellow line. He says, stay away. And then he says, get back in when it finally gets above this line. Because Joel keeps it very simple. Joel also would have looked at the Moderna and saw that the ATR was $25. So what Joel would have done, watch this, guys. You don't even need the Ichimoku. We're going to take it off. We're going to take the moving average off. And we're going to take the squeeze off. Because I got to teach you guys how to trade like for real. Because what I see you guys doing is terrible. Terrible. You could have just simply gone over here and said, Joel makes everything easy. Like literally, when you decide to take a trade, I want you to think like me. Say, well, like, what would Joel do? Joel would have gone over here and said, you know what, Moderna might be something I want to trade to the upside. If at 9:30 or 9:40 you saw that it was selling off, all traders have access to this information right here. Everybody that trades, even the people that really move the market. So why am I going to buy something to the upside if I know that it's going down? I want y'all to think about that. If I throw a basketball from the third floor out of a window, I'm not going to try to catch it from the second floor or the first floor, right? It's going to go down, and hit the ground, right? And you know where it's going to. You literally know what the floor is. Y'all be trading and don't be knowing where the floor is, which is crazy to me because I'm like, how do you even, like, that makes no sense. So what do I mean by that? Well, everybody knows that every stock has a calculation on what it's been doing for the last 14 days. So if you're looking at how much it moves, I know that Apple, like when you pull up Apple and you decide you want to make money on it, do you say to yourself, Apple moves $3, or do you just trade it? Because that's what a lot of you guys do. I don't even have to look at Apple and I know that Apple moves about 3. Y'all see how I said that and I automatically know how much it moves? Okay, it's 3.26 now. It changes. I think last week it was like 2.75. Now it's 3.76. But before I even bought Apple, I was like, oh, it moves $3. Y'all don't be doing that. And then be wondering why y'all lose money. I simply would have gone over here and said, you know what? Moderna moves $25. So if Moderna's selling off at 9:40, why am I going to buy it right there when I know minimum it's probably going to move $25? I have the information. They have the information. So all you had to do was go over here and literally just pull out a calculator. You literally could have just said, you know what? If this sells off from 376, and I know that this moves $25. 376 minus $25 is going to give me 350. One. So then when I come into the room and I say, I do this all the time. I'll come into the room and say, all right, guys, I'm thinking about buying it right here. People be calling me all types of names. And I'm like, you realize I just caught the bottom and I didn't do nothing. I didn't use no indicators. Well, I used an indicator. I just used math. The stock moved $25. Why are y'all making trading and investing so hard when it's like super simple? The stock dropped $25. If you wanted to take a shot there, you would have caught the low. Y'all see that? And then it dropped back down. Guess where to, guys? Back to the same support over here. If you're trying to buy it to the upside, Joel would have stayed away because by then I'm not trying to trade anything that's underneath this Ichimoku. I would have been like, there's a whole bunch of other stocks I could be trading to the upside. I don't have to wait until this happens and then buy it to the upside. But if you were using my strategy and you were like, man, all I did was just subtract this from this and gave myself a chance to buy at the lows, this is how you buy at lows, people. You don't buy at lows by pulling up a reversal or looking at the support from yesterday or pulling out a Bollinger Band. Because, yeah, it can hit a band, but if it's going, I'd rather you guys say this can move $25. So because it can move $25, I got a reversal indicator so that if it hits the reversal indicator and it hits its ATR at the same time, maybe now I'm giving myself a chance for it to come up. Now, a bunch of you guys' light bulbs just went off all over the place because I gave you something fundamental that can go along with whatever you're using. All right. I'd rather you go that route than just being like, it's hitting this, so I'm just going to start buying it. It feels like it's been selling off, so I'm going to start buying it to the upside. It's 12 o'clock and I'm on lunch break, so I guess it should be going to the upside. That's gambling. That's gambling, guys. All right, let's look at but look, if you wanted to buy this, quit trying to buy your strike. I'm gonna buy it here because the strike is the resistance level is 363. You don't move the market. So if you wanted to make some money on this, I would say at 10:30, let's say we hit the support area and I was able to get in. And I was like, how do I know when to get out? The billionaires tell you when to get out, or at least get you close, because they're the ones that move the market. Whichever one of these contracts got the most contracts, probably, I'm not going to say that's where it's going to go, but at least if you're buying the options contract, that's a point that you can look at, right? So you see a lot of people buying it at the 400 strike. You see a lot of people buying at the 370 strike, right? 370 and 400. At the time, we were at 356. So because the all-time highs were 376, I can see why you wouldn't choose this one way down here. A lot of you guys don't have the oomph to buy this one yet. All right. So let's just say you went conservative and bought this one and you had a little bit of money and you decided, wait, before we even look, you wanted to get in when it hit these lows, right? So it was right around 10.15. How much money could you have made? Millionaire challenge. How much money could you have made? Look, I forgot that fast what time we got in. Hold on, hold on. I literally forgot that fast. What did I say? 10. Let's say we got in late. Let's say you got in at 11. You got in at 11 o'clock higher. 11 o'clock. You went conservative. Got in at 11. Decided to buy options. How much money could you have made? Is this right? Really didn't do nothing. Got in about 1,500. All right, it didn't really make any money. It got maybe $100. So this was not a really good one. It even dropped. You probably would have lost on this bad boy. Nah, it didn't go to 750. So you would have broke even on this trade, or you would have left the day, maybe making about $100. All right, is that the 370 strike? And that's the 370 strike. Early this morning, though, it actually made money. It went from 1,600 to about 2,600. 1,600 to about 2,600. Now I want to see how the other. Let's do it the way Joel would have traded it. Joel would have gone with the one with the most contracts. Let's say I bought the 400 strike, and we never even reached 400 today. Let's see if it would have made you some money. Every trade is not gonna make you money. It also didn't. Okay, so that trade didn't really pan out. It's not often that I don't. It's rare that I don't see that really panning out. So that's not a trade that really made you any money. You would have broke even. You actually probably would have lost a little bit of money on this one. But at least you made at least you tried, right? And that happens every now and then, which is interesting to me. I'm still surprised that this didn't go up in value. Totally surprised. Hmm. Anyway, let's see what the charts did. The stock went from 367 to 373. I also wouldn't buy a stock that has already doubled its ATR. Like the ATR is $24 from the lows, 330, 370. That's why I don't buy stuff like this, right? That's why I don't buy things that are underneath the Ichimoku at like 930, 945. I need it to be above it. But that looks like it probably didn't make you any money unless you bought the stock. But let's look at another one. Let's look at Nvidia. Nvidia 200 day. Is it 50 day, 200 day? People are buying it. See that? Here, these are wins. These are wins. These are wins. These are all wins. 50 day and 200 day. Whoo! You would have caught a killing in Nvidia. All of these wins, no losses. What is it doing right now? It's way up here in the stratosphere. If I wanted to trade this as a investor, I'm sorry, as a trader, I'm gonna wait until it gets down here. If I wanted to trade it as an investor, I'm gonna try to wait and see if it can get close to this 200 day. If I want to make money in the next 5 to 10 days, then I'm gonna pull up my 1 hour chart and see if it's above this yellow line. And as you see, it is. Okay. Stocks usually run for 7 to 10 days. They go down 7 to 10 days. They go up 7 to 10 days. Then they go down. Now we're peaking above this yellow line. So I probably, if you were going to get into this 1, 2, Joel gets in, I would have been in sometime around here. What you also want to look for is unusual options. All right. So if you were buying this week, it looks like the unusual options are at the 330 strike. Okay. If you're looking for unusual options activity, and all the volume, guys, is still on the call side. The call to put ratios are like 1 to 4, which is crazy. All right. 3 to 4. 3 to calls, 1 to put. Okay. Those are the types of unusual options activity you want to look for. Let's look at Roblox. Roblox. I'm still trying to get this for my kids. I missed it. I was supposed to buy it when it IPO'd. Let's look at the 200. So Roblox is another stock that's involved with the metaverse. Well, over here back in March the 10th, Roblox IPO. Now the rule is you're supposed to wait 3 months before you buy a stock that IPO. So when it IPO'd in March, April, May, June, when June came, you had a chance to buy it, and you literally was able to buy it for around the same price it IPO'd at. And I did not get it for my kids, and I should have bought it for 70. It ran to 140. There's your first double, and now it's sitting up here at 129. And I'm waiting for it to at least drop to the 50-day, but look at how far the 50-day is. $40 away. So I'm still waiting to buy Roblox. There is a gap right there that might need to fill. 80% of gaps fill. So if this falls down here, y'all see I have an alert here to buy some Roblox stock. Let's see how it did daily. Would Joel have traded this? Nah, but did it make money? Yes. I wouldn't have been in this trade because at 9:30 we were underneath this yellow line. It didn't even really get bullish until about 10:30. And then it went up in price. Did it drop its ATR? Well, Roblox's ATR is $10. So when it hit a high of 127, I would have been looking to buy it in the 117 range. It got close. It got to 121 and then it started to take off. So I would have missed it this way and I probably would have missed it this way. And then it ran $10 from here, 121 all the way to about 130. So it ran $9 this way. So it pulled kind of what we call a fake. It dropped $6. But remember, Roblox moves about $10 every single day. And it ran 9 that way. So it ended up running its ATR, but it started to run late. And then it finally gave you its average. Let's look at Tesla. Tesla. When should you have been able to buy Tesla? Right here. 200 day. That's Joel's method of entry. 1, 2, Joel gets in. 1, 2, 3, Joel gets in. It went through the 50-day. So when you have a 200-day that's really close like that, I kind of, if it runs past the 50-day, probably going to the 200-day. Then it got close to the 50-day, hit it right here. Here's your trades for you traders. There's a trade. Look, you would have been up immediately. Here's a trade. You would have been up immediately. Here's a trade. You would have been up. Well, you would have struggled for about 3, 6, 9, 12 days before it started to run. It hit this 50-day. That's a loss. But you lost. Then you recovered by buying it back at the 200-day. Y'all see that? Bought it back here at the 200-day as an investment. And you would have been winning. All right. Very easy trade. One loss. In the past, it started to go above the 200-day back in 2019. All right. November. 2 years. Not 1 year. Yeah, Joe, but 2002. 2 years. 2 years it lost once. That's why everybody loves trading it. All right. Ran through here, hit the 200-day, then it just kept doing what it does, making you easy money. 2 losses. We'll count that as 2 losses. Okay. 2 losses. All right. How did it do intraday? Intraday, would Joel have been in this trade? Probably. You know how I know this? Because I put this trade out there at 9:30 this morning. If you were in the Ninja Trading Room, this was the first trade that I talked about. I pulled up a picture and said, I'm watching Tesla. It's doing what I like. All right. And sure enough, Tesla made you some money. Started to sell off a little bit right around 1 o'clock. All right. But intraday, it would have made you some money. All right. Let's look at Amd Semiconductor Company. Let's look and see what it does for the 200-day. Y'all see how every stock we're looking at exhibiting the same patterns? 50-day, 200-day, 200-day. Very easy setups. 50-day, 50-day. Struggled a little bit here, but even if you bought it there in February and gave yourself 50 days, February, March, April, you still would have recovered your money, right? So even though I'm gonna count this as a loss from hitting the 50-day, it really ain't a loss. Then it made you money there, made you money there, made you money here, made you money here, made you money here, made you now. It's not gonna make you money if you got a 7 or 10 day option on it. If you got a 7 or 10 day, if you're looking for 7 to 10 days, you need to be looking at an average that's seven. Like you need a 7 day period average. Like the average should support the trade, right? 50 days, 50 days out. 200 days, if you can, 200 days out. 20 day, 20 days out. Keep it simple. Make it simple. Okay. 200 days, it struggled. But if you bought this in March and you gave yourself just 90 days, right? 90 days was what? April, May, June. 90 days. Still gave you money. Still gave you time and it made you money. I'm telling you to give yourself even longer than that. If you can't afford it, you shouldn't be buying it. If you're buying it in stock, great. Dollar cost average here until it starts to move. Came down here, gave you another chance to buy it for you late people. Then it bounced off the 50-day right here. It's not magic that is falling to these 50s, guys. It's just what people like me are looking at because we make this simple. I don't use 57 indicators. I don't need them. All right. If you learn price action, it's going to be a lot easier to make money on these. If you were looking for unusual options activity, there was unusual options here. If I was to go all the way out till January, 219, 309, that's not unusual enough for me for AMD. But now it's really unusual. 3,800, 2,800. Okay. All right. Let me look at Apple real quick. Apple. Let's look at the charts. We all know that Apple's going to give you the patterns that you want, right? I don't even have to draw them anymore. 200 day, 50 day, 50 day, 50 day, 50 day. If you're giving yourself 50 days, you still would have been all right. I know it was angled down. 200 day, 200 day, bounced perfectly. 50 day, struggled a little bit. Came down, gave you the 50 day again, came down, gave you the 50 day again, and now this is where we are. What should you be doing? Waiting for it to get to this 50 day or this 200 day. If you were to go 60 days out, are there unusual options activity? Well, if I go out to January 2022, I got a strike right here. If I go out to February or March, is there unusual options activity? They're like twice what you see on the put side. All right. Here's an unusual $200 strike. Okay. I like to see when I'm really going out like this with Apple, I'm trying to see 5 figures. But I'm not really seeing anything unusual after February or March. So Apple probably can run probably till about March, April, and it'll probably tire out until I see unusual options activity that goes out a little bit further than that time frame. Let's look at Microsoft real quick. Microsoft. Same thing, 200 day. Hasn't given you a chance to buy it at the 200 day since March of 2020. Microsoft ain't even seen its 200 days since then. So if it's not going to drop to the 200, then you got to use the 50 day. And if you notice, hit the 50 day here, hit the 50 day here, hit the 50 day here, here. Hit the 50 day here, hit the 50 day here, hit the 50 day here, here. Y'all see all these wins? This is like the easiest trade. 100%. If you had traded Microsoft and you went 50 days out, you would have won 100% of the time. 100%. That's crazy. Hadn't lost, right? And when did this start? This started way back in that was the March lows. Microsoft has not seen a loss at the 50-day or the 200-day since October of 2018. It's been 3 years since Microsoft lost trading trading off of these averages. But yet y'all don't want to learn how to use these. It hasn't lost since 2018. Could this be the time it loses? Yeah. But boy, oh boy, has it made people money. And even that was just the 50-day that it lost at. It still didn't lose at the 200-day. It hasn't lost hitting the 200-day since, oh my God, I can't believe this. It hasn't lost hitting the 200-day since 2015. Y'all see this? Microsoft has not lost. Like if you had bought Microsoft at the 200-day and waited 60 days, it hasn't lost in 6 years. 6 years, but y'all don't want to trade it. It makes no sense to me. I'm like, you got to know how to make this easy. If you're trying to get to the promised land, you trade the easy stuff first. Then you trade the hard stuff, okay? Let's look at Amazon. Trying to get through all of your stocks. It's always the same ones every week, though. Fang, Tesla, Roblox, Nvidia. All right. Amazon, same thing. I mean, guys, I can't make this any easier. I can't make it. This is what, 2015? 200-day, 200-day, close to the 200-day, 200-day. This lasted from October. Now, this was from October to April. All right, so we'll count that as a loss. And then back to winning, back to winning, back to winning. Look at when it hit the 200-day win, 200-day win, 200-day win, 200-day win, win. All right, so easy. Facebook. I know y'all hate Facebook. You hear all the negative news. Facebook has had, I'm sorry to tell y'all this, Facebook has had negative news since it came out. But how does it react to its 50-day and 200-day? 200-day win, win, win. That's the March lows. Win, win, win. It's winning right now. It lost at this 50-day, but it won 1, 2, 3, 4, 5. You know, it won like 6 or 7 times just hitting this 50-day. That's it. Y'all see that? And I'm telling you, they're not drawing these lines later. You see these lines, and then when it starts to drop, like when it started to drop here, you were like, oh, it's probably going to drop down here to this 315. And when it drops to 315, I'm just going to buy it. And then I'm going to give myself 60 to 90 days options and just sit back and chill. And then when it hit it, it gave you 1 day to buy. No, it didn't. It gave you 1 day. 5 days later, it was up $20. Now, $20 is a lot on Facebook. That's like a 8% return. Then it dropped, gave you a chance to get in again, 3 days, 1, 2, 3 days. And then now it's sitting up here. You will be in the money right now if you had bought options. If you just bought the stock straight up, you'll have some little profits right here. You can put your stop at break even. That's a winning trade. Okay. 200-day moving averages angled up. All right, Disney. Disney is kicking everybody's butts. All right, so let's talk about Disney. All right. Let's pull up Disney on we haven't used this yet. Let's pull up Disney on Yahoo Finance, right? So Disney, we love Disney. Disney for the last 5 years has been bullish, right? If you bought Disney 5 years ago, 160, you're not breaking the bank. You're not doubling like you would in any other stock. But you get decent gains. You'll be up 50% in 5 years. That's averaging like 10% a year. So if you're buying Disney for, your kids, understand it's not one of those stocks that's going to double, triple, or quadruple. And you would have known that just by looking at its beta and looking at its performance for the past 5 years. So, what has it done in the last year? Well, in the last year, we're almost back to even. It really didn't do anything all year long. Why? Because of the pandemic, right? People can't go to the Disney parks. So Disney's been struggling, and I've been understanding that. So until we get something going on with COVID, or if Disney doesn't hurry up and do something involving the metaverse, you're gonna see Disney struggle, and that's fine. Okay. So, as an investor, should you be buying it? Well, the highs were around 190. 52-week range, Disney highs were 203, lows was 154. So even from the lows to the highs, that's not really breaking the bank. But you guys should know this when you're buying it, right? When you buy Disney, you should have known it's not going to triple or quadruple in price simply by looking at its last 5 year performance. In the last 5 years, even if I bought it here at the lows, it barely doubled in price. And that was if I bought it at the March lows, the worst that it can ever be. I got 100% return, which was great to get. But there's a lot of other companies that did extremely well from the lows that's going to give you, better bang for your buck. If you bought Square at the March lows at $40, it's at like 200 right now, you know? Or if you bought crypto, if you bought something that had high beta, but if you don't know what beta is, you don't know if that company can give you the types of moves, that you're looking for. All right, so that's Disney. But it's struggling right now. And even when I look at like I don't like even if you're buying it right now, I want you to buy it as an investor. I don't want you to buy Disney as a trade because it hasn't broken back to the upside yet. And we don't know how low this thing can go. Like it's just going straight down. And I know that there's a hammer here. Somebody said that today, but Joel, it just formed a hammer. Well, the rule for hammers are this. This is how you play a hammer. If we break this trend and we wake up on this side, maybe we feel the gap. Maybe the chart looks like this. Let's say you wake up and we wake up at 152 tomorrow. And then it comes down in price and fills that gap. And then it starts to go up in value. And this starts to go green. Then Joel would take a chance at it. And yeah, I'll buy it higher at 151 than where we are right now, which is 147, because it's now got momentum. Then I would go and look at the unusual options activity and see if traders are buying it at a strike price that's higher than we are and is very unusual. Now, this Friday, you got the 150 strike there. Some of you guys can take a shot at it. I'm not going to take a shot at that one unless I see unusual options activity the week after that and the week after that. And I mean, I see it, but it's not enough. Well, here's 8,800. So that's kind of letting me know that everybody is really going after this 150. But you see how they're giving themselves more time? They're giving themselves until December the 17th or December the 23rd. 150 strike still has the most contracts. So it looks like Disney wants to go to 150. Will it happen this week? I don't know. But I like the odds because the volume is here. Now, what I don't like is the volume over here, except that this is a put at the 150 strike. Somebody is buying deep in the money puts at the 150 strike. So if I was a betting man, I would be thinking 150. All right, which is right there. All right. Let's look at Ford. Ford sitting at all-time highs. Well, 3 days ago it was at all-time highs. I wouldn't be thinking, if you haven't invested in it yet, wait till it hits this red line. Try to get it as close to this 200-day as possible. Does that mean Ford can drop $5? It sure can. It can drop 25%. Ford has a decent beta. Ford is known to drop 20%, 15% in 1 year. That's nothing for Ford to drop. Let's see exactly how much that is. If it drops from here to here, that's about a 31% drop. Can Ford do it? Yeah. Just wait. If you haven't gotten into Ford yet, wait. Wait till 17 if you just have to get it. There's also a gap down here that didn't fill yet that I don't like. Now, what are the options telling us? The options are telling us that short term, Ford has the 19.5 strike. Well, we're already at 19.6. So that strike already hit. Next week, nothing really unusual. To be honest, there's more volume on the put side. Not good if you're trading Ford. December the 31st, there's some unusual $22 strikes, but it's not enough to make me really think something's about to pop. But look at this, 6,400, 5,800 at the 26th strike out in January. Getting interesting. 3,000, 24,000 open interest. Maybe they're going to release a new car in February. I don't know, but why is there so many people buying these options 3 or 4 months out? All right, you should start. That's unusual options activity. I don't really see anything unusual after that. Let's see if there's anything in June. I mean, there's 3,900 at the 29 strike. So they're looking for Ford to make a significant run. Somebody asked me about Meta Materials. Well, let's break down Meta Materials. All right. Meta Materials is a $1 billion company. Now, here's what's interesting. It used to be a $21 stock. I don't really like, I like that the 200-day is here. I do. It dropped so fast, though. It was crazy. You could have bought it here and made a little bit of money. You really could have. You got the 200-day and the 50-day right here. But what I don't like is it's been going sideways from July all the way until now. So, yeah, it might break back to the upside. But if I was buying this, it would not be as a trade. It would be as an investment. Okay, why? It's been going sideways. It's not really giving you any money. Okay, it was this high and then it lost a lot of its market cap. That means something happened, guys, where, if a stock goes from 21 to 4, that means it lost 75% of its value. Something happened for it to lose that much, right? It used to be 5 goes into 21. It used to be a $4 billion company that lost 75% of its value, and now it's a $1 billion company. Something happened. And when a company loses 3/4 of their wealth or market cap, I kind of shy away from it, because anything more than 50 or 60%, unless it's a cryptocurrency. But what I like, I don't want to beat it up, is I like the 200-day angled up. I like the 50-day starting to angle up. So if you're going to take a shot, you could have taken a shot there, even though there was a head and shoulders. This is a head. This is a shoulder. Head, shoulder, shoulder. Right? The head and shoulders tells you that it's going to go back to here. It looks like it wants to go down here to this $3. So what I would do is I would set an alert. If you're really interested in this long term, buy some now at 376. Prepare to pay 286. This thing can drop $1. And look, guys, it looks bearish. It's been going straight down. It broke through the 200-day. It went red on the John Carter, and it hasn't broken this trend back to the upside. Okay. All right. Let's look at let's look at let's look at Peloton. Okay. Let's check out Peloton. All right, Peloton. I guys, now y'all see I sold 49 shares way up here. So I'm good. I'm so happy I'm not in Peloton. Peloton's 200-day moving average and 50-day moving average is angled down. I don't like that. As long as this is angled down, I don't care about this stock anymore. I don't. I'm out. Peace. And I've been right. All right. When I did sell it the first time, I can't remember when that happened. Oh, I sold it right here. It got a bounce. Now, why did it get a bounce? It got a bounce because this 200-day was still angled up. All right. It dropped. I got out here at 89. It went up in price, and then I was so angry because I missed out on it going from 89 to 130. All right. So I missed out on about a 30 or 40% gain. Then it started to drop again, and then it couldn't break through its 200-day. It got stuck. Hit the 200-day. Hit the 200-day. Then the 50-day crossed over. The 50-day crossed over here, which is why I was out. The 50-day has steadily been below, but look, people still were buying it at the 50-day. Hit the 200-day, but then hit the 50-day, rose, and it was all good until this started to angle down. Uh-oh, spaghetti-o. Then both of them started to angle down right here. Uh-oh, spaghetti-o. So when it popped, it couldn't break through the 50 or the 200-day. Now short sellers are doing the opposite. They're shorting it every time it hits the 50-day and the 200-day. And that would have been the trade. Look, they're shorting it every time it hits the 50-day. Why? What's the psychology behind this? Well, it's the opposite now. It's the opposite. Now that it's going down, it's going to do what it's supposed to do to the upside. It's going to, every time it gets to the 50, short sellers are going to sell it. Hits the 50, short sellers are going to sell it. It pops to the 200-day, they're going to sell it because it's now angled down. And look, short sellers would have won here. They would have won here. They would have won here. And it started to give them wins right here. That was the first win. Then it was the second win. Then the third win for the short seller. Then the fourth win. And that's all they're doing. They're just shorting it into this blue line. Joel's not going to buy it as an investment until this turns around. All right, let's look at we looked at Meta. Let's look at ChargePoint. ChargePoint is an electric charging station. A lot of people, including myself, have been buying it because the infrastructure bill that just came out has a lot of money that's going into the infrastructure for electric cars. And ChargePoint is one of the leaders. It's a $8 billion company. Now, if you notice, you see how big all these other companies are? Facebook is $1 trillion, Amazon's 1.8 trillion, Microsoft's 2.5 trillion, AMD is 195 billion, Roblox is 75 billion, ChargePoint is 8. It's 8. Metamaterials is 1. They're small cap companies. They're small. They can grow. You make your money from the growth of a company. You're trying to flip your money. This is the type of companies you buy. Because if the market cap is small enough, this can go to 16 billion. Let's say this goes to 50 billion. It won't even be as big as Roblox. And you make 5 times your money, 6 times your money. 8 times 6 is 48. All right. Expecting your Tesla to grow 6 times its value is unrealistic. It's already $1 trillion company. You think it's going to go to 6 trillion? It can. But what's more likely to happen? ChargePoint going to 50 billion or Tesla going to 6 trillion? I would put my money on ChargePoint. especially since they're both in the electric car space. Doesn't mean that Tesla can't make you money in the options market. But as far as an investment stock wise, those doubles or triples, you're not going to get them like you did when Tesla was only a $25 billion company when I was recommending it. And then it got to 100 billion. And then it grew 10 times from 100 billion to a trillion. Guys, it's not going to give you a 100x anymore. Them days is over. And the only way you're going to recognize that is by looking at the market cap. But charge point, what I don't like now, I'm in it as an investment and I'm watching it. I'm watching it very closely because the 200-day is angled down. What do I like about it? I like that the 50-day is up. The 20-day crossed the 50-day. And it looks like it's not breaking lower than this 200-day. Now, if it breaks lower than this 200-day, it's probably going down to this 50-day. That's probably where it's going to go. All right, first. So when we started buying it, it was down 61%. I love stocks that are down 50% when I start buying them. Okay. So we're up, a decent amount of money in charge point right now. So I'm really not even getting out unless we break these lows. And I'm holding it for the long haul. So I want you guys to do the same. I see what PayPal. All right. Let's look at PayPal. PayPal. $200 billion company. Looks like we're hitting some support. Where did the support come from? That support came from all the way over here. Now, this kind of sucks for PayPal because PayPal's 200-day is now starting to angle down. Why do I still like it? I still like it because I just believe in fintech companies as an investment. As a trade, I don't believe in it for now because it can struggle. I want to trade something where the 50-day is angled up and the 20-day is angled up. I don't see that right now. It looks like the trade is to the downside, but you do have support right here. You do have support right there. Okay. So if it breaks that support, it could go to, and this support has been there since September 2020. All right. So last year, right around this time, we just came back to the same prices we were at last year, which that's pretty much on sale, in my opinion. It's also down. If you take out your tool here, PayPal is down 40%. Guys, you got to buy stocks like this when they're down 40 to 50%. All right. If you really want to buy it on super sale, get it 50% off. You want to buy it in the 150 range. We're about $30. Actually, we're about $30 away from that 150 range. It gets down to that 150 range. You might want to take a shot at PayPal. Now, does PayPal have unusual options activity? It sure does. Like crazy volume. All right, so you got 4,500 at the 187 strike. We're there. You go out to December, you start seeing volume. You start seeing people go all the way out to the 250 strike, but you got 1,800 here, but you got 3,500 here, 3,500 there. So I'm going all the way. I think I bought April options. I'm going all the way out the here's January. They start to go up. You go to February. They're starting to increase. You got March. I think I bought some out in April. Okay. Not the kind of numbers that I'm looking for, but I'm looking for a pretty, I'm looking for it to maybe struggle, but then it starts to catch its footing and then start going up in value. Because even here, the options contracts are so much more than the puts. It's like ridiculous, except for and I mean you got 270, like you see this here, but it's at a higher strike. I don't see anybody buying puts on PayPal like all the way out to like April. So that's why I'm watching it And I really believe that this might be a very good trade, even though we don't see what we like to look for because it sold off so much. And it's one of the darlings. It's a $200 billion company, and everybody is still using, their PayPal. So, you know, keep looking at it. EV Go. What time is it? 7:51. EV Go was down today. Big, 5%. 200-day is angled down. 50-day though is angled up. Looks like that's where it wants to meet. I wouldn't be surprised, guys, if we drop another $2. All right, that's going to be a lot. That's like 20%. It might drop another $2 because there's two things that are happening. You have a you got a gap right here. You have a gap right here. And then you also have the 200-day and the 50-day that are converging right there at the same price. So if it comes down in price, we get to the 200-day, 50-day. But does it have? Now, guys, EVgo is not a billion-dollar company. Now, I'm showing you this because it used to be a billion-dollar company, right? It used to be worth about 1.52 billion. I don't mind you guys showing me companies that are less than a billion that used to be a billion. So it's a small cap company. It has to break back to the upside, guys, and start to go green if you wanted to do anything. And we need this 200-day to start going up. As an investment, you guys can take a shot right here. As a trade, it's probably it's underneath this Ichimoku. Remember, stocks are going to run for 7 to 10 days. They're going to break underneath the Ichimoku and go down 7 to 10 days. Then it's going to break above this yellow line and go up for 7 to 10 days. Then it's going to go underneath it and break down for 7 to 10 days. So as a trade, I would not be thinking about getting it yet. It's got a downtrend. All right. Even if you look and see unusual options activity, which I don't see. Well, that's all the way out to May. Well, there's 1,000 here at the $15 strike, which that's a lot, guys, for December the 17th. Like, do you really believe this is going to move like that? It could. You could wake up the next day and EVgo can just explode in price, but 15 is really, really aggressive. All right. I want to see it break above here first, come down, maybe start coming up. Then I might, think it can get to this $15 strike. But it looks like it wants to go down. And I see 1,000 there. So that is unusual. There is more calls being bought than puts. Even if you go out to January, they're really not that outstanding. Like, I know this is 500, but I see 300 here. I want this to be like, 1,000, and then I see like 100 or 200 over here. And then I don't really see anything in February. I don't see anything in May. I don't really see that move in EVgo that I think can happen. Now, can it happen? Yeah, any news can come out and you can see that joint explode in value. Somebody asked, what do you think about Maine? All right. What is Maine? I have no idea what Maine is. Let's look at Maine here. Maine. Oh, okay. So Main Street Capital. I think that's a bank. I hate banks. This bank is a $3 billion company. In the last 5 years. What just happened? No, we don't want to try this for 14 days. Maine, in the last 5 years, rose from $17 to 200. That's a crazy gain. Its market cap is about 100 billion. Oh, we're looking at Square. Maine again. Maine is a $3 billion company. In 5 years, it's done nothing. In 5 years, it's gone from 36 to 43 to 20 to 45. So it's done nothing for 5 years. Last year, it rose from 31 to 45, right? So it gained about a 50% return. If you caught it at the lows, you're up about 50%, but that's only if you caught it at the lows. Now, it does have a decent beta, which is 1.4, and it has a crazy dividend. Guys, this bank offers a 5% dividend. That means if you got $100,000 invested, you're gonna get a check for $5,600 every single year. You're gonna get it in quarters, though. You're gonna get a quarter of that every 3 months. But that's a pretty nice little dividend to give you, seeing that CDs out there might be 2 or 3%, right? So a 5% dividend with a stock that's been going up is decent if you're trying to be conservative. But this is not one of those stocks that's going to get you a double, right? You're going to be waiting a long time, to get a double. The last time it doubled in price, it was $22 back in 2012. Okay. And it's taken what, 10 years for it to double? I don't want to wait 10 years for something to double and then wait another 10 years. That means I got to wait 100 years for it to hit a mill. So it's not one of those companies that's going to, that I look for when I'm doing the Millionaire Challenge. But if you were thinking about buying options on it and you bought Maine, I want to look for unusual options activity. I don't see any. The volume is low. I don't see anything unusual. It's just not something that I would pick. Like, I don't pick anything unless it has at least 1,000 contracts. And we're looking at all the contracts that are available for this particular bank, but I don't see it. So it looks like a solid company for, investment purposes where you're trying to be really, really conservative, maybe something like a 401k. But I wouldn't personally invest in it looking for a 10x, and I definitely wouldn't be buying options on it trying to make, my 10x. But it's a solid company. All right. I think I got to. Oh no, I didn't. Look at some of you guys' comments. What's going on, LaMonica? All right, Stone. I don't think we looked at Stone. I think we skipped that one last time too. Stone. What is Stone? I have no idea what Stone Co does. Well, just pulling up an hour chart, guys, it's underneath the Ichimoku. Joel ain't trading us to the upside. Period. 200 day. The 200 day is angled down. The 50 day is angled down. The 20 day is angled down. Now, what do I like about this? What I like about this is that it's at super support. Like, it literally can't get better than this as far as your support level. Like, if you're going to buy something at the absolute lows, there you go. That's a triple bottom. One from 2018. You got a triple bottom. Like, it's at the lowest price that it's ever been. So if you're thinking of it as an investment and you want to go against the 200 day and the 50 day, buy it. Right? This is when you buy stuff like this. I just decide that I want to wait. I like my money to start making money immediately. I would not buy options on this because as an investment stock wise, if you bought it, let's say it doesn't turn around for 2 years. At least if you buy it in stock, you don't have to worry about it. But I need momentum behind it if I'm buying options. I need it to start going in my direction immediately. And I don't see that. It might struggle right here for 3-4 months. You know what I'm saying? It looks like when it gets down here, though, it moves up in price. So whoever showed me this one, it's a nice, I understand why you're buying it. You got a triple bottom. Look, 1, 2, you got a triple bottom. Can't go wrong with a triple bottom like that. Like, it's literally sitting on wheels. So if you're going to trade it, go out as far as you can. If you're going to buy options on it, let's see if we can find something unusual. I don't really see nothing unusual here. Plus, if I'm going to buy December, Let's go to January, December, nothing. January, it's picking up. It's more than this. I like to see 1,000. December, yeah, yeah, hardly any volume. Here's something unusual, but look at this. It's even more unusual on the put side. I don't like to see that. Like even. Let's go to February. Let's go to, oh, dang, it skipped from January to April. April. So I don't really see anything overwhelming me. Again, I would buy this all day for stock investment. I would not buy it as a trade, and I definitely wouldn't buy options on it until I see it turn around and I start seeing unusual options activity. I appreciate it, Freddie, inviting three other individuals to the room. Deacon Ricky said buy. Oh yeah, but low. Oh, buy low, sell high. Definitely when you're investing. And yes, definitely. I appreciate that you appreciate this. We looked at Peloton. Somebody said, "Hey, friend. Hope you guys are still on." Trey, I guess, was bigging me up on something I said. All right. I guess Tish Peaks is in the house. I'm glad you got your charts up, man. All right, we looked at okay, so Byron wants us to look at the we still got time. I know we're a little bit over. I started a little bit late, so I want to make sure I get to everybody's stock. But you wanted me to look at the 160 strike for December, got in last week, hoping Apple goes up. All right, so let's look at Apple. What they're talking about is an Apple is a options contract, right? So Apple, if we know that the strike is December the 3rd, we know that it's soon. So I don't need to look at a day chart. I need to look at an hour chart to see if we're bullish. Now, what's great about this trade is that Apple started to go bullish back on November the 16th and it stayed bullish. Remember, stocks are going to go up for 7 to 10 days, then they're going to go down 7 to 10 days. Hopefully, this isn't the 7 to 10 days that it goes down because stocks run 10, then they go down 10. Now, it did start to go down on this Monday, so it's been about 7 days. Now, you're asking about the 160 strike. So the 160 strike is here. If I were you and you were trading it, I personally, if you could break even, I would be out of this trade, literally, because you got this trend right here. Now, you said you bought it. I don't know when you bought it. You said, okay, you got in last week. Now, if you got in last week, you were able to catch it some. So I don't know where you are with this particular trade. But on that Friday, when it started to sell off, you should have been out of it, in my opinion, especially if it broke below here. All right. Now that we're down here and we got to break through this trend line if you want it to stay above 160. Now, it could go sideways, but it's Monday now and you're waiting till next week. No, December 3rd is Friday. I personally, if you're here, if you could get your money out of it that you put into it, I personally would be out of it. If you can wait until Friday and you can risk the whole 100%, then that's fine too. But you want to make sure that the options contracts for December the 3rd, you better hope that the most contracts are at that 160 strike. And at that 160 strike, you do have a lot of options activity at the 160, 162 and a half, and 165. So that's something that you got good going for you. But we're there now, right? So even if you held it, I don't know what your strike price was. It looks like it could stay above 160, between 160 and 165. So hopefully your break even is not 160. If your break even is 160, get out. If your break even is like 155 or 154, you can still take that gamble. But again, we might go sideways for the next 3 days. So just be careful with that particular trade. All right, we didn't look at Beyond Meat. So let's look at Beyond real quick. I'm out of Beyond Meat. I don't own it anymore. I don't trade it anymore. I made my money. I'm gone. Why is Joel gone? Because the 200-day is angled down, the 50-day is angled down, the 20-day is angled down, and we can go down to this price. I mean, can you stomach another 50% drop? If you can, stay with it. Joel's out. As an investment, as a trade, does it have momentum to the upside? No. As a trade, it sucks. As an investment, it sucks. Did it make money today as a day trade? Well, Beyond Meat moves. Beyond Meat, hold on. Beyond Meat moves $4. So when it was at 78, everybody should have known to buy it at what, guys? 78 minus 4 is 74. So if you were going to take a shot at it, you knew exactly around what price it probably could drop to, 74. So if you were able to buy it at 74, you would have caught the low. Well, you wouldn't have caught the low lows. You would have caught the lows. It would have broke above the Ichimoku, and you could have made some money to the upside. So as a intraday trade was the only way that I would trade Beyond Meat. And even if I traded it at 9:30 this morning, I would have known to stay away from it until it got to 74. Then once it got to 74, I would have checked to see what the options was telling me. And then I would have known to pick probably the 77 strike. How much money could you have made on Beyond Meat? Even if you hated the stock and you just wanted to trade it for the day, it looks like it didn't start moving till about 11 o'clock. How much money could you have made if you had gotten into this stock around 11 o'clock? Could you have made any money? I don't know. Let's see. You could have bought Beyond Meat around 11 o'clock in the 100 range, right? Right around this range. And you would have made you would have been up about 50%, which is not bad. It went from $100 to 150. So you could have been playing around with Beyond Meat, made a 50% return, and been out of it again. And that's the only way I would have traded Beyond Meat. All right, let's look at Neo real quick. Y'all gonna keep me on here all night. I gotta go eat. All right, Neo. All right, I'm staying away personally from anything that's China related. The only Chinese company that I own is Alibaba. The only one. Why? Because China is just going through some craziness right now. They're going through the same real estate crisis we went through back in 2008, 2009. They're handling the pandemic totally different from us. All right. They're using different vaccines than we're using. Like they're just all over the place. We might delist their companies. Delisting means we're going to take their companies off of our stock market where you can't even invest in their companies. So I'm just staying away from it. And Neo is the Tesla of China. But if you're interested in it, the 200-day is angled down. So as an investment, I'm really not interested in it, but you have some support at the $33 level. Okay. You do have some support down here. But the 200-day is angled down. It looks like it's struggling, and I don't really see. I mean, the options contracts are stupid. Look at this, 10,000 versus 5,000 over here. Let's look at December the 10th. I mean, the options are very unusual. And if you're going to trade this to the upside, it looks like that's where it wants to go, looking at the options contracts, to be honest. I wouldn't go out no further than looks good all the way up until about okay. Okay. Looks good up until about January. Looks like somebody is trying to hold it at 40 though. All right, so be careful if you're trading Neo. Yep, somebody was talking about Maine with the monthly dividend. Definitely. Let's look at Jumia. Y'all giving me stocks right at 8 o'clock. Let me look at Jumia. All right, Jumia is the Amazon of Africa. I get it. This is like the worst pick of the year for me, right? I've been pushing Jumia for like 3 years, and it just won't make anybody any money. And it's one of them stocks that I'm just determined to make money out of. But I get it if you're not in it. But it's sucked as a stock, like big time. The reason why I love it, guys, is this is the only reason why I keep buying it. Because it's $1 billion. It's the Amazon of Africa. Think about that. It's the Amazon of the whole continent, and it's only worth $1 billion. Amazon of America is worth, 2 trillion. So even if this stock ran to 10 billion, there go 10 times your money. If it mess around and get to 100 billion, this is one of them stocks, guys, that you can look up 10 years from now and it made you 100 times your money. That's right, $100 can be worth 10 grand. You see what I'm saying? $10,000 investment can get you to 1 million. That's what this type of stock has the potential of doing. And you're gonna have to suffer with it until it figures out what it wants to do. What I think is going to happen personally is I think another company is going to buy them out and then do what they need to do with it to get that e-commerce space down. Because for some odd reason they can't figure it out. So because the company is so small and it's only $1 billion, a larger company like a Shopify or a Mercado Libre can just come in and be like, "Yo, we'll just buy y'all out for 10 billion." And you can look up one day and this can be $120 stock, and you make 10 times your money in literally one day. This is the type of potential this company has. So it used to be a $70 stock, right? So it was worth 5 times. It was worth about 6.5, $7 billion. So 200 days angled down, 50 days angled down. I would only invest in this company. I wouldn't even buy options in it. I would just invest in it. It's cheap enough where the stock price is cheap enough where you can just hold it and just hold it with me. Like this is one of them stocks that's just sour in my account. That's just gonna sit there. I'm determined to make money in this stock. And I'm even thinking about buying more if it drops down into this $7 range. All right. We get around to I don't think it can get to $2. Anything can happen, but if it messes around and gets down to this $2, you just gotta buy it just to be buying it. Anyway, so that's Jumia. All right, I'm gonna do two more and then I gotta go, guys. I really do. All right, SoFi. All right, SoFi, guys, is one of my favorite fintech companies. I just added it to my portfolio, and I really, really like it. Now, I bought it when it started to break out of here. I caught all of this gain, and then now I'm at like break even. So not really feeling that, but it's a very good fintech company. So if you're looking for a company that has growth potential that can give you a 10 bagger, this is one of those companies. Okay, it's at the 200-day, starting to break above it. You got the 50-day still angled up. Looks like a lot of these fintech banking companies are struggling. So just think of SoFi like SoFi is like a PayPal, just a more sophisticated PayPal, and it's a $14 billion company. These stocks can run to 100 billion. Why? Because PayPal, Square, they're all 100 billion already. They paved the way for companies like this. And have y'all seen the commercials where they're like doing the money dance? I think that's the song. But it's like I'm not gonna sing it, but it's the money dance, right? If you've been watching CNBC, you just start jamming when you hear the commercials. So I love the commercials. I love how hip the company is. I would definitely buy it as an investment. I don't really know too much about the options. The options look good, but when I looked at the options last time, there were unusual options way out here. If you want to spend $38 December 10th, take a shot. Look at these options way out here. It's $9. Who ain't got $9? Throw $9 at this bad boy. This bad boy gets to $25, guys. Your $9 can make 700. Literally, your $9 might have the potential of being worth $700. Right? How did I do that quickly in my head? Because we're at 18, 19 now. We get to 25. That's a $5 move, right? 19 to 25 is a $5 move. You're controlling 100 shares. That's $500. You literally can put up $9 and maybe it's worth $500 by December 17th. It's going to be a long shot, but anything can happen. Who doesn't have $9? All right. You take trades like that. All right. But that's so far. All right. So that was the last stock I'm looking at. Dawn came on late and she said, "Hey, Joel, I'm late, but what's the red thick line? That's the 50-day moving average for your traders." Looks like somebody already answered that question for you. But yes, it's the 50-day moving average. How's Zoom looking these days? All right, I'll look at that. The student loan commercial. Oh, yeah, the student loan commercial is when they're doing the money dance. Let's look at Zoom. Guys, I still like Zoom. I don't like Peloton. I like Zoom. I like Zoom for long term. Why? Because it used to be a $588 stock. If you ever are thinking about buying a stock on sale, or the quickest way to making a 100% return is to buy a stock that's 50% off. The fastest way to making a 100% return is buying a stock that's 50% off. The fastest way to making a 100% return, or the easiest way, is to buy a stock that's down 50%. So if Zoom was a $588 stock, let's just say 600, just so we can make the math easy. 600 divided by 2, or 50% off, is going to take you to 300. All right. Well, 300 was right around here. So Zoom is not only off 50%, it's off like 60, 65% in value. And guys, people are still going to use Zoom. I don't understand why y'all think because the economy has now opened back up, why we wouldn't be using Zoom. And remember, China is where Zoom first started to circulate, and they're literally on they're in-house right now. I'm thinking this is actually the stock you really need to be buying again, because I'm thinking it's about to shoot up in price, because you have so many other countries uh, that are now closing the borders or closing down cities, and they're going to have to use technology like this to continue to use business. So I'm really liking Zoom right now. I'm totally surprised that it didn't pop today. It was up, I think, on Friday. Totally surprised that it didn't pop today. So let's see if it has unusual options activity. All right, Zoom 3,000. Let's go out a little bit further. I got to teach you guys how to look further out. Let's go out to January. I don't see any unusual options activity. Woo, look at there. 13,000 contracts at the 220 strike. That's crazy. But I think that's what happened, when we got that sell-off. So that's unusual. But I want that unusual options activity to be a little bit higher. You got 2,500 here. Let's see if we see anything out in February. Let's see if we see anything out in March. How about April? So I don't really see anything unusual for now, unless you're like trading it. But I really like Zoom. I really do. All right, I got to get out of here. It's 8:20. I got to go spend time with my family. I do have a family. All right, but I'm coming to you guys from Decatur, where is greater. Decatur, where is greater. And I ask people all the time, what's the quickest way to making $1 million? Well, it's this.